this is a good topic. So startup growth style, ये बहुत important component है. And then how it justifies equity valuations. So आपकी ये recent startups ही हैं who are actually showing a lot of valuation. And how do you compare them with the traditional styles, maybe? Am I going in the right direction? Chalo then, this is the group discussion. Go ahead. 1 minute, and then I'm timing you all for 10 minutes.
Hello guys, I'd like to start the discussion. So hey everyone, my name is Kaustubh and the topic for discussion is startup growth style is good for an equity valuation or not? Like how exactly is the relation and what exactly is happening right now? This is the thing which I'll cover right now. So let me just define what exactly is startup growth style. So startups growth style, I would say in one sentence is that prioritizing revenue over profit. Like they will, try to reinvest heavily into expansion. Like they will try to increase their TAM as much as possible. They will focus on scalability and network rather than trying to make some money out of it. The greatest example, the example which everybody knows here, I would like to give is Zomato. Like the cash burning, whatever we call all of these businesses, Zomato, Swiggy, businesses which have not made profit yet. Recently they have made some, but businesses which are not profitable until recently, but they were just expanding like anything, trying to make sure that our name is spread. And I would like to, give two, three reasons why exactly their equity valuations are so high for Zomato. If you open Zomato and you look at its PE right now, so PE is price to earnings. It has a PE of greater than around 1000. I think it's quite greater than that. And that's a magnificent PE for a stock. Like you can only come to two assumptions for that or two conclusions for that. Either the company is very overvalued or people see that it has great growth potential. That is my first point. So like the valuation happens on the present value of expected future cash flow. So that's how any stock is analyzed. And if investors are willing to buy at such a high PE, that means that there is quite a lot of potential in the company, is what investors are saying for startups. Like then again, we come to the same one line that higher the risk, higher the reward. And their revenue multiples, which I previously talked about, is quite great. And for startups, there is one unique factor to them. They are the market leaders in the segment because startups are usually defined by someone who is trying to do something new, something unique. So those guys have the first mover advantage and they have the market leadership because they are the first movers who have come earlier than that. And it's although from the negative side, I would like to add one thing that all of these startup and all of the equity valuation of the startup is quite hyped by all of the VC firms, like who are the early investors who want to make sure that they get enough returns. So those guys also try to, make the price. So these guys are the one who set the price during IPO or whatnot. These guys, try to make sure that the general audience gets an idea about how exactly the business is performing too good so that they can get a good exit. So going forward, I can give two IPOs which are coming. There is PhonePe and there is another one which has Walmart as its, you know, Walmart as major shareholder. Like
So
credit card,
thank you,
yes.
Kaustubh. I
Yeah,
would like to take it for further. So I also think that startup style growth sometimes justify equity valuation and sometimes not. And it depends based on the type of startup it is and their potential growth and whether there are two things that matters the most. First is their timing, whether they are at the right time or not. For example, the Netflix has worked on their OTT platforms, streaming platforms, but they had started very earlier. So at that time, they haven't seen much of the growth. So it was a very risky business for the investor to invest in these kind of business. But later on, when internet was ubiquitous and everyone was investing and everyone want is shifting from traditional television to the smartphone and laptop. So this Netflix become one of the largest company. Even currently they are trying to acquire Warner Bros. And moreover, I would like to give another example. in which startup style growth does not justify the equity valuation. We have seen in the recent time the latest IPO of Fractal Analytics. For those of you who don't know, Fractal Analytics is India's first AI-based company which is listed. It has got the oversubscription of 4.8 times. On the other hand, a PSU named Bharat Coking Coal Limited, uh, whose main purpose is a mining company, and his IPO got subscribed around 480 times. So 4.8 times and 480 times. So we can see the investors value more on the traditional businesses which are generating the real cash flows, not the one which have the potential, but the industry is very much fragile due to the overall disruption. For example, the Claude startup has already disrupted the IT sector. So that's my point.
I would also like to point out that
I agree with
the
Shama
topic for the
actually.
discussion is growth, startup style growth justify the high equity valuation. So I would also like to go in different directions of actual valuation. So as you know that we use a lot of formulas while arriving at a valuation. So if you're using Gordon dividend model and other models which use cash flows growth. So if you can see that if you're using a growth of a startup, let's say if a startup has been in the rally for like 4 to 3 years and it has been growing exponentially, and if you use that growth percentage, your valuations will automatically be higher. So it will lead to high equity valuation because the growth has been very steadily growing for the past few years. So I think that's one of the main reasons why in calculations you can see that a high growth will lead to high valuations.
I would like to add few points to the some conversation. So people may think that if a company is making a really good growth, doesn't mean that they have really good valuation. Because if the company have very high P ratio or EV or ROE, it's because of mostly because of the debt the company has took. If the company has taken the debt, the P will be high, even the ROE will be high. They also have to look at the ROIC and ROCE. That will you will know that how the company actually generating the profit. So and also if there is startup, so there is no point of doing the other valuation technique like DCF and all. The price to sell will be the proper valuation technique for the startups. And I think that if the company is growing, so the company will have proper equity valuation is not the correct thing to uh, analyze. That's my point.
Hemant, I would like to add something to your point. Majority of the investors in the company are retail, like what retail investors here I'm talking about. These investors are not as informed as us. Like all of the individuals who are sitting in this forum, they don't make investment decisions based on ROCE or ROIC. We can get to that conclusion why exactly the PE is high, why exactly it is going. Most of these investors invest in these kinds of businesses because they see quick money and they expect that kind of growth. Like why exactly the company is growing so much, they expect that growth. That is why they are able to. That is why they are willing to purchase all of these shares of company at such a high premium.
And that's the reason they are making loss, no?
That's the
Because they are
reason they
not
are in
aware of
losses.
it. Yes. But that's I want to say that even if the company is growing, doesn't mean that they will have value. We have to look
Yes,
into
but the
other
market
fundamental
positioning
factors.
also matters in case of startups. If a startup is positioned very well in the market, people will know more about it and they will be willing to invest more in it, and hence it will lead to higher valuations. So if
When you want to invest, you have to ask when you want to
But
invest, when you will.
right,
And
Hemant and
here
Guys,
your point comes to
I want to add
distribution of the
one point
startup.
in Ria point is that when Rakesh Jhunjhunwala has openly said in his one of his interview that after the 10 to 5 years, there might be chances we will see some good downfall in Zomato and all these companies. And even though Asian Paint also, he was not bullish. He was not even bullish in Titan, which he made a lot of money out of it. So it is all about business cycle, economical cycle, and several components come together. Then only any business can be run. If you go in any urban area or start a idli shop, you won't be able to make money. You have to near the station or place where there is high footfall. So it is all about combination of both the things, economical, consumption driven, which type economy we are living, whether we are in high consumption driven economy or low consumption driven one. Like USA is a high consumption driven economy. India is not in that phase right now. People over there, if they want to go for one place to another, they prefer private vehicle, not like in India. So it is a combination of both. If you are investor, you have to combine both the things and analyze by yourself. Loss is everywhere, risk is everywhere, I think.
I
Yeah,
agree with
Amit,
Amit
I also
actually.
want to add a point that all of these high growing startups, like the reason why they're growing so fast, like I've taken two, three examples, although not all startups are growing that fast. The reason is not just because of one factor, and it's because of multiple factors which are outside of our influence.
I
Like
agree with
that's the
Kaustubh,
reason.
your point. The reason why Zomato is able to grow in India is just because Mota Bhai has given a free internet to audience. That's why we have a good internet access today. If internet access was not there, I don't think so. We would have seen Zomato, Swiggy, Flipkart, any of these companies having a large footfall. So it's all about combination of multiple things. These days
Yes, sir, but
we
we cannot apply
AI
the same factors to the everyone. No? We have to
no, we
analyze
can
something
apply.
on
See,
our own.
let me take you another example. Right
Mhm.
now, some of my friends were saying that AI will replace equity research analyst job. Let me tell you, when there was a Bahi Khata system, when accountant used to write up all the accounting statements in red book, then Excel came. Many people lose job. No, they just made their life easy. In simple way, right now for data punching, which we are using manually, we can do it by AI. And for cross-checking, it will take us less time. So if I don't think so, it is a negative thing. It is all about how we think as an investor or as a trader or as any venture capitalist. I will see how each and every cycle I can correlate and dot I can link.
Moreover, I would like to
Mhm.
add startup style valuation or startup style growth is justified if we take some of the sectors which has very much impact in the real life. For example, not every startup in a particular sector is going to thrive. Most of them will going to fail because there's a concept called winners takes all approach. So that, for example, in the AI segment, Claude, OpenAI, Claude, Open, and Anthropic, and OpenAI and Google. These three are the major players which are trying to dominate the market. And moreover, if we take the example of India, most of the startups in India are in the very crowded segment, like only e-commerce or financial services or fintech. Most of these startups, like if we take around, for example, 100 startups, so maybe 50% of the startups will be in these segments, and rest of the 50% will be distributed in advanced deep technologies like biotechnology, like space industry, or biomaterial, or nanotech, or defense. So if we take the example of these startups which take longer to generate revenue, but these are the very crucial or for us. For example, now we are realizing the impact of not developing our own infrastructure around the AI, the basic our semiconductor chips, the our talent pool. We have seen the brain drain happening from early 2010 to till now. Every smart person from IIT is going to US. So we have seen that the ecosystem needs to be built from
Hello,
ground
can I
level, foundation
conclude?
level. Yes, Neha.
Yes.
What
Before
I
you
would like to
conclude,
say,
can I add one point? So
Yes.
I just have one question. Yes, we have seen everything, we have said everything, but I just want to say that if the startup is growing, what should be the investment thesis for the equity valuation for it then? Do you think that the growth shall be justified as the equity valuation? Can we justify the growth as a valuation?
I
I
think
just want to
we should first ask in which sector that startup is in. Is in
every sector,
e-commerce?
taking every sector. If the startup is growing, can we say that if it's growing, then it should have a good valuation? Even the company having a good equity, but they take a lot of debt, and that's why they make money. It's in the balance sheet. They think that yes, company have a lot of cash, but it's coming mostly because of debt. Even though they are growing, but still they are in debt now. So how can we say that the growth is equal to valuation?
That depends on their return of invested capital is more than weighted average cost of
Back now,
capital. If it
yes.
is more than WACC, then we can say that they are generating
Yes,
value.
that's why my first statement was same. Even though company have ROE, but still it should have good amount of ROIC as well as ROCE. High PE not going to define anything. We have to see other fundamentals too. Even though they are growing, we cannot say that they are making good valuation of their equity, isn't it?
yes, I would like to conclude. What I would like to say is that growth by itself does not justify high valuation. First, the growth must be scalable and durable. and the company needs strong unit economics. The investors must also believe in the company, and profitability must be delayed but not absent. Thank you.
Okay. But conclusion में आपने नेहा ये नहीं बोलना है कि I feel. As per the discussion in the forum, I would like to summarize with these points. Firstly, secondly, thirdly, finally. हाँ जी, Prajakta, what is
Okay.
your point?
I'm sorry, can you repeat again?
What was your point which you did not say in the forum?
Okay, so my point is that valuations should not just depend on whether the company is growing or not. It's two-sided, that a company can grow either like through customer acquisitions, but it also depends if they are able to retain those customers. And apart from that, it should also not be aggressively expanding and burning cash like on a very high level. Like for example, if we look at Byju's, so in such cases, we know that the company had a good, like it had a very what do we say, market positioning. It had a good market positioning, it had good offerings, it had a good customer base, but it could not sustain its advantage because of aggressive expansions. And as well as their I think even there were other instances, there were other problems as well with the company, but it was very highly valued due to this reason. But I think it's not just the growth, we also need to look at the financial health of the company when it comes to valuation.
Yes. So why didn't you speak in the forum?
Actually, I'm experiencing a bit of a network issue, and I'm trying to trying to figure out what's going on. A lot of time, whatever other people were speaking, it was getting broken up. Now I think I'm getting more clarity.
Is it happening with everybody, or we can hear each other clearly?
Yes,
No,
ma'am.
it's on my side. That's that now I think.
All right, not a problem. Everybody again gave their insights about this topic. Elaborate. Costa was very, very elaborate. Hemant was exhaustive. Shama had his own points to deliver. Ria backed it up. Neha, very nice conclusion, but we wanted to see you in the initial phase of the conversation also. Try to be there. Otherwise, conclusion के लिए ज़्यादा marks नहीं मिलेंगे because you are waiting for everybody to finish and just accumulating the points and representing. This is the notion of the evaluator. Okay? Otherwise, you've done a good job. All right. I see Kshitij is there. Karthik is there. Bharat is there. Kunal is there. Dikshank is there. Ankita is there. Please, guys, raise your hand for the second group discussion. Yes, Bharat is available. Kshitij, Karthik, Kunal, Amit, Dikshank, Ankita. Please raise your hands for the second group discussions. Nobody's interested. Amit is there. Prajakta is there. Very good. Ankita, very good. Dikshank. Bharat, raise your hand and be a part of this discussion. Kshitij, Srivastava, Kunal, Viraj, Karthik. Karthik, can you hear us? Rohit. Sorry, ma'am, I have to go for some urgent work. Okay, Karthik. What is more urgent than me?
हेलो मैम सम कुछ फैमिली काम है
Sorry,
कुछ फैमिली में काम है
I couldn't hear that.
फैमिली में कुछ काम था
Okay, go.
घर का काम
Go,
अभी
go.
तो फैमिली है
हम हाँ सही बात है. Very true, very true. किसने बोला ये? सही बात है.
थैंक यू
हम
मैम
तो फैमिली है.
ऑब्वियसली
हेमंत
थैंक यू
बोला.
मैम Obviously.
Karthik has just proved that we are not family. है ना Karthik?
No, ma'am, it's not again.
Okay, yeah. You're going to participate in the group discussion, okay?
Yeah, I will participate in, tomorrow.
Tomorrow. Okay, dear. Okay.
Thank you.
All right. The forum, I'm going to give you an easy one. All right. I think we have picked up this topic, but I would want you all to brainstorm because all new members are going to talk on this topic. Is IPO investing still profitable for retail investors? Yes, Bharat, Amit, Prajakta, Ankita, Dikshang. Anybody else? Neha would want to participate in this one also?
Yes, ma'am.
Yes, please go ahead. Okay. So simple. Is IPO investing still profitable for retail investors? Discuss.
So hello everyone, good evening. So due to some technical issue, my camera is not working. That's why I'm not able to show myself.
Yes,
First of
Amit.
all,
Amit, go ahead.
so today's topic is whether from IPO it is good for every retail investor or not. So let me first thing, retail investor is not aware about the entire that particular company business cycle, how that business is working, how the management has been performed, what the people who are working under as a management, what is their qualifications, what kind of thoughts they have about the business. So it's totally depend if someone is really aware about the investments, and that is why right now SEBI has introduced some of the programs free of cost to make a bit awareness about the investment and all. That is why it is totally depend person to person, and majority of the time whenever any listing company is happening, there is a major time retail investor has lost. It is a combination of both. So it is all about person to person. I
Okay.
want others please give their opinions. Maybe I can be wrong or right. So I want your opinion to be added.
Okay.
Sorry, Amit, can you repeat the last sentence? Actually, your voice is echoing.
Oh, so the investment in IPO is totally depend on to the person, how they see the business model and opportunity growth.
Hello, hello everyone. I would like to add some points to the Amit Tripathi speech.
Yes, yes, Bharat.
Basically, the stop at basically IPO investing is not for everyone, and it is just like a lottery ticket. If we want, we get the lottery, or else we get loss. And the market also has a has the market also plays a strong play in while investing a bull market. When in bull market, if we invest in the stock, we can get a good returns, but in bear market, even if we invest in a good companies, the retail investors can incur losses due to the bear market. That's it.
So I would like to add some point.
Mhm.
Like in my opinion, IPO investing is remains profitable for the retail investor because they majorly come with the strong financial background. Like if you talk about the if you talk about the DMart, when DMart enter, it already has a strong ratios, like its ROC is more than 20%, which shows the consistent growth and a negative working capital cycle and the conservative leverage. So when the price is issued, so majorly when the IPO with a which came with a strong financial background, its price is basically reasonable or hello.
Yes, yes, we can hear
And
you.
the price is basically reasonable, and where the earning multiples relatively to grow, which is visible which is visible if we compare to its peer benchmark.
Hello.
Yes, Neha.
Can I add something?
Yes.
So I think IPO is still good for retail investors because it gives early access to the retail investors to own shares of the company which they believe will grow in long term. And SEBI has now tightened quite a lot of rules and have made mandatory a lot of disclosures and processes. So companies with the poor quality financials are not allowed to list. Only good companies are allowed to list. And yeah, that is my point.
Shantanu, you will
Uh,
also participate in this one, huh?
I'd like to
Yeah,
disagree with what Neha said. I believe that retail investors are mostly on the losing side when it comes to IPOs because, as pointed out by I think Kaustubh in the last discussion itself, most companies when they are like listing, they are looking to get a good valuation and a good price. So they, if they're aggressively priced and at a premium, then retail investors uh, might and eventually when the stock prices fall, the retail investors will not gain as much, and most of the IPO related retail investors investments in IPOs are mostly driven by hype and not by adequate research. The DRHP is also not enough when it comes to financial information to give a good background on the company, and I don't believe that in each and every case the peer analysis would be helpful. Like for example, if we look at Paytm, so how if it's Paytm's IPO, how would you evaluate by taking a peer benchmark whether in the long run this company will be profitable or not? So I disagree with the Neha's point.
Hello, I would like to
Hello.
add some points to some examples to Prajakta. For example, the Zomato when listed, it was around 150 rupees per share, but in the next 1 year, the price decreased to 50 rupees, which means many investors have lost their invested value to one one third of the value was remaining after 1 year. So basically, the retail investor would have sold those shares in by for 50 rupees. So after that, when the company have recovered some, when people enter at 50 rupees, the, they started to gain some profits.
I want to add
so
another
in my
point, guys, on Bharat point is that ki Tata Sons is getting several warnings from RBI to list their company. Why Tata Sons is trying to avoid the listing process? Just because they know ki when they will list, the people will get invested now, they will get the profit. But they don't want ki retail investors should involve because there is going to be a management related issues in AGM meetings. If they want to pass any new rule, there is going to be a different problems. That's why even though another person who is heavily invested in Tata Sons, I don't remember his name. Like recently, he got death in his car also while coming from Gujarat.
Cyrus
So,
Mistry.
ha,
Cyrus
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 Mistry.
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 Cyrus Mistry. Sorry, so thank you, Hemant, for recalling me. So Cyrus
Anytime.
Mistry was creating a board member problem for assigning a Tata Sons chairman. So there is a issue. So whenever company want to exit their investors, now especially VCs, they prefer to list the company. Or I have never seen any company who is using listed amount which they are getting from IPO to use money to expand their operations. Majority of the time, it is used to just give exit to their investors.
So to just I disagree with one point that Amit said just now, that Tata regarding Tata Sons, that they are not looking to go for an IPO or list their company because of difficulty in decision making. I think it's more about more that they don't want to disclose any.
Oh, she has some network glitch, I guess. No worries, some other person can continue.
I would like to say what she was trying to say, at least from my perspective, what is open. The
Mm.
problem with Tata Sons is that the maximum amount of revenue, almost 70 to 80% of revenue, comes from only one company, which is TCS, like 60 to 70. And that company is now trading at 2020 levels, like what it was trading in 2020 in the year. So it's really looking bad for the company itself. They're trying to, do something and they're just scramble internally to make sure that they are looking good in the eyes of us who are the shareholders.
Okay, Shantanu, where is Shantanu? Shantanu? Can you hear me, Shantanu?
Shantanu is saying in the chat that he has some network issue.
All right. Yes, ma'am. I want you to participate in the debate. इतने diligent बच्चे हो ना तुम, इतने obedient से. भाई बेचारी प्राजक्ता, she's struggling with that glitch.
I joined in from my phone. I think I'll leave that point be.
And try speaking. I think you'll get more frequency.
I'll I think I'll just can I add my point now, or is the discussion done?
No. You can add your points.
Okay.
Kaustuv, back to you up, but you speak your mind out.
Nothing. I think regarding Tata Sons, it's more to do with that they don't want to disclose any of the information relating to their companies and investments to the general public, so that they don't invite any as such scrutiny. So that's the only reason behind, and not just that decision making will be difficult. That's the reason they don't want to opt for an IPO.
So in my point, rather than the Tata Sons and any other company, sorry, IPO investment can be attractive when it because it offers the early access to the fundamental strong business like DMart, we said, and the valuation they provide scope for the future retailing. And in my point of view, IPO is best for those investors who already know the company's background very well, or its financial position very well to invest.
Okay, please conclude, someone.
Guys, I wanted to conclude this. I only want to say one line that your entry is someone's exit. Just remember that whenever you are applying for any kind of IPO, someone is getting out while you are getting in. So whatever we say about early access or whatever we say about, getting to becoming a part of a greater business, earning the profit, having the liability, having that control over business, having voting rights or whatever, you need to understand that fundamentally if the business is good or not. Because you're not investing just to, remove your money tomorrow. We're not trying to become traders here. Sorry if that's a little offensive. Nothing against traders. But we're not trying to become traders here. We're trying to become investors. Like even after 5 years, when we look back to our investments, the money will be locked for that period. We'll have to make sure that the returns are good. And after 5 years, we won't have to say, "Arey yaar, jaise 2% mila 5 years mein, it was not worth it." So our view
Yes,
should always be long term.
yes, I would like to continue to conclude another point to Kaustuv. As people are invest in IPO just because of sentiment, as one of my friends said that like the Landscat IPO is coming, so bro, you should invest. So I said, why should I invest? I don't know about the company. I don't know its financial. So
They are
there are
speculating,
certain
that's
scenarios.
why.
There are the certain scenarios where people invest. I can say what is the word in a hurry. एक वो वर्ड है, सॉरी मैम फॉर द इंग्लिश, एक वर्ड है ना कि मतलब सब भीड़ में जो सब जहां
FOMO,
पब्लिक जा रही है
FOMO.
वहां इन्वेस्ट करो.
There is
So
FOMO and
that's
there
why.
is herd
Hmm.
mentality.
Yes, herd mentality, right, Kaustuv. Thank you. Herd mentality.
Can
Because
I
of
add
the
one?
herd mentality, people are investing blindly in particular IPO.
Can I add Dishank? Can I add one point to Dishank's point, ma'am?
Yeah.
Sorry?
So mostly, I just want to add one point to the Dishank's point. So people mostly invest in IPO as a speculation. They
Hmm.
think that that's a short-term investment. If you invest for 1 week, you will money get double. That's the sentiments of the all the investor in the IPO.
Yeah. Right. Right, Hemant.
Thank you.
Okay. Hemant, you made so much effort today. Wow, wow, wow. You're in a very good mood, it seems.
I am always in good mood. आपके क्लास में अच्छा ही रहेगा मूड मैम.
Oh, lovely. Wonderful. आज आपका आवाज ही बहुत अच्छा आया, हेमंत. Your voice was also a little bolder than usual. Yes, very good. Bharat, your
Thank
voice
you, ma'am.
is naturally very nice. आप उसको use करो. Participate more. Bharat, do you understand Hindi?
Yes, ma'am.
You understand?
Yes, ma'am. समझ में
Yes.
आता.
Sorry?
समझ में आता, मैम.
समझ में आता है ना?
हाँ, मैम.
हाँ, तो your voice is naturally very good, bold. उसको और use करो. Be a participant all the time.
Okay, ma'am.
All right. Yes, Neha, you had some points there?
No, I already said what I wanted to.
Okay, all right, okay. Amit was also there participating behind the camera, but he did his best. Dikshank was very, very, very instrumental in this debate. Prajakta, kudos to you. Despite of the technical glitch, you still wanted to participate. Shivraj, hi. You're
Hi,
too
ma'am.
early
Hi.
for tomorrow's class. Did you do up your CV?
Yes, ma'am. I saw. Like,
Did you do it up? After you redo it, you can share again.
okay.
All right, okay. All right, we still have 15 minutes left. I would want to ask each one of you one question each, and the answer should be very brief. All right? Quickly, we'll start with Hemant.
Yes, ma'am.
Okay. Hemant, can you tell me what would you see if I don't know what this is, FCFF versus
FCFF.
yes versus FCFE.
FE. Okay, ma'am. So FCFF simply means that the free cash available to the company after all the paying operating expenses and capital expenses before paying to the equity and debt holders. So that is the free cash available for the company. But when we pay to the equity debt holders, so whatever is left, it is for the equity holders. So that is the simple concept of it. So it also we can use the free cash flow, the whatever the free cash we have available, we can use for many purposes. Take for example, paying dividends, paying salaries and all. So this is a simple definition of the given concepts.
Okay. How many are satisfied with his answer? Send me some emojis because I don't understand anything. Chalo, good. Everybody is responding. That means your answer is right. Hemant, congratulations.
Thank you, ma'am.
Yeah. What is terminal value? How is it calculated?
Okay, thank you so much, ma'am, for giving me this question. So terminal value is the value that we usually calculate if you are valuing a company, which is the value which is calculated. Let's say we are calculating a company and we have to arrive a value of that company. So we are taking a period of 10 years. Now at the end of 10 years, we are assuming that company is not going to end. Company has a, it's an company lives on and the people don't, right? So at the end of the 10th year, we still know that there are much more years left for the company to grow and to generate returns. So, but if you are calculating and you are doing the valuations, it will take you a long amount of time if you calculate to an infinite amount of periods, right? So at the end of that 10th year, we will calculate a terminal value, which means that for us, given under these circumstances and assumptions, we see that the future potential of the company will be this particular value. So terminal value is just a present value of all the future potential that the company might earn in the future.
I understood. Amit has already given you a heads up. Good. Wonderful.
Thank you, ma'am.
All right. Bharat. How do interest rates impact valuation?
Yes, ma'am. That's a wonderful question. The the interest is nothing but the company pays on the debt which has which it has taken from the banks. In the valuation, the interest rates can affect as the company pays interest to the interest holders.
I didn't understand anything.
Sorry, ma'am, I would like to prepare on that.
Okay, prepare on that. Who wants to pick this question?
Ma'am,
Ma'am,
I
can I
want to
ask?
answer this question is that key
Ma'am,
how interest rate can affect the company valuation.
Yes.
The first thing I want to tell you is that company has borrowed money from the bank or debt. So
Okay.
they have to pay the interest rate along with the installment. But if the company is debt free, like Eicher Motor, it will not affect them. So it is totally how much ratio they have to carry the debt. Right now, Reliance is debt free. So if tomorrow there is some major thing happen in economy, there is not going to be a that much in terms of interest rate fluctuation will affect the Reliance. So it is all about how much debt you have taken. Personal level also, if I take, let's say if I'm earning 30 lakh rupees a year, and if I have taken a 70 lakh of worth rupees of loan, it will somewhere stop my opportunity cost. I won't be able to go for a honeymoon with my somebody just because there is already expense over there. So it is totally very how much you have and how much you have to pay.
Okay. Okay. I understood this one. How many support this answer? Good. Okay. Shivraj. What happens to valuation if WACC increases? WACC.
Yes, first of all, thanks for the question, ma'am. WACC is the short form used for the weighted average cost of capital. So it is all about how much uh, that you are sorry. Yes. If that value of that WACC is more, that means the that means that company is sorry, ma'am.
ma'am, can I answer?
Prepare. I'll come back to you. Don't worry. Prepare. Hanji, Dikshant.
So basically, ma'am, when your question is what happens if WACC increases?
WACC increases. Yes.
WACC. So as Shivraj said, the definition, when WACC increases, so certain impacts happen in the company's financial position. The future cash flow are discounted more heavily, and the present value of the present value declines, terminal value falls significantly, and if we talk about the equity valuation compresses.
Okay. Equity valuation compresses.
So an increase in WACC basically raises the discount rate, which applied for the future cash flow, reducing the present value, and the comprising value multiples, particularly for the long duration for the growth assets.
Okay. How many are happy with his answer? Send me some emojis. So everybody is this down arrow. What does it mean?
It means he spoke well, like the value will decrease.
This means he spoke well.
No, the value will decrease. He was talking about.
Okay. All right. Who didn't get a chance? Kaustuv. Pitch me a stock.
Okay, thank you so much for that question. So first of all, I would like to begin by saying that I've been currently tracking the hospitality sector for like past 3 to 4 months, and currently IHCL is the leader in this sector. And the reason for tracking this sector is there is a structural change happening in the sector currently. There is a lot of supply and demand has not yet met. So all of this data from IHCL is trying to double its portfolio in the next 5 years almost. So IHCL, although it focuses more on MICE, so I would not recommend IHCL. So it is not a beneficiary of this structural shift. There is a stock in this segment called as Vinitiv. So Vinitiv Hospitality is a new company. It's a small company. Recently, it has had an IPO, and it is focusing on luxury and it is focusing on travel. I would like to recommend this stock as an investment because it has great potential. It's a small company and it can go. One point is it's a small company. It can grow big. Second point is it is focused on the premium segment. And as travel is growing in India, what I've talked about previously, there's a structural shift. I would like to, opt for this stock going forward. Although there is one problem in this stock, there is a huge amount of concentration risk. Like a lot of portfolio is, in one particular region. So if the company expands well, so currently which it is doing, it is going into pilgrim locations exactly, which is also one of the beneficiaries of this structural shift, pilgrimage tourism. But I believe in the future, the stock has great potential.
How many liked his response?
Thank you, guys.
Chalo, great. Shivraj, pitch me a stock.
Ma'am, here I am little bit confused. Like, whenever we go for that pitching a particular stock, then that means we are we are satisfied with that all financials and that potential growth of that particular company. When we are pitching that stock, that means there are no but. Like, what I feeling. Correct me if I'm wrong. Uh,
No, I think
Kaustubh.
I think Shivraj,
Okay.
when you are pitching a stock, you can also mention the negatives, but you can see it like a sector wise. See, if you are
Okay.
like Kaustubh said, he was doing the hospitality sector. So within that sector, he pitched Inventive, first negating the IHCL. So
Okay.
because no company is without buts, every company has its own buts, right?
And the thing is
No,
that,
I asked because
yeah,
like I don't know like whether like how to answer that question. So that's why I asked.
Yeah,
Thanks for.
justify in the
Okay.
way that you will invest in it,
so
like
like
that.
Okay.
there are two approaches. Like we know that top down and bottoms up. So whatever approach you have used to study the sector, study the stock, do that. So if you have, come across a product first and you have looked at the brand and then researched the brand and then the sector, just say that you have done a bottoms up approach. But now we are doing a top down approach on the hospitality sector, which is why I took the example of this. And I had to take the example of market leader because that's the biggest guy in the sector. And I had to, negate someone in a bad light to show that Venative is good. And I was expecting a follow-up question for Venative, like if the guy knows, then he will say that, कि यार, ये तो सिर्फ पुणे में ही है. And how is he, benefiting from all that? Because MICE is not doing that well. And Pune is, IT hub and all that. So that's why I had to, speak about the Rishikesh things also. Like
Okay.
one good
And
thing, one bad thing.
one more point, if
Okay.
I'm pitching some stock, I want to know ki how many times he want to hold that stock or investment. So that will give me more horizon about the company which I can suggest him. So before, like his risk appetite, what kind of expenses he having. If I am an elder brother in any particular family, I'm going to support. I have to support. It doesn't matter whether how much I am earning. I have to share my portion of salary with my family. So it is totally depend person to person and to investor also. Recently, one of example, I was pitching a one company to one of my client. So he was an angel investor. He has
Please the name,
invested
sir.
in some of the good companies and he made profit. So whenever he meet me, he always share about ki. First of all, you should ask me about what kind of investment time horizon you are looking. That is the most important thing. Because time investment run parallelly.
That's a good point, Amit.
Got it.
Yes, Dikshant wants to try. Dikshant, your mic was on. You want to try something? You want to answer the question? I don't think so. He can hear us. Hemant, can you pitch me a stock?
Okay, ma'am. Thank you, ma'am. So I would like to say if I have to invest, I will invest in Sami Hotels. So right now, they have three segments for the three types of rooms they have. First, they have upper hostel.
आपका आवाज shaky हो रहा है. I can't hear you much. बहुत shaky हो रहा है.
Now am I audible?
Yes, you're audible. Can you hold the earpiece a little closer?
Now.
Yes.
Okay, so ma'am, we have to invest in Sami Hotels. So recently they have others got a bit around.
नहीं, अभी भी बहुत ज्यादा shaky हो रहा है.
It's no issue for me. I can say that.
Hello, ma'am. Sorry, I didn't answer you.
Hanji, you want to answer the question? Do you want to pitch
Yes.
a stock or you have a question about what they were discussing?
No, I want to pitch a stock. But after the Hemant, like
Hanji,
please.
बोलो. Go
saying
ahead.
something. Then me or Hemant?
Hemant is trying to fix his mic. Meanwhile, you can take a minute.
Okay, so thank you, ma'am. Thank you for the question. Like we are tracking both the hospitality sector and the auto sector, and for the last 2 to 3 months. So I would recommend you to invest in Mahindra, Mahindra and Mahindra, because for what I have seen in the last 2 to 3 months, like it is became the second largest automobile seller in the Indian auto market. Major reason behind it was because of the GST cut. Like people due to GST cut, people are driven are moving towards more SUV as compared to other cars. The second reason is the reduction in the tax rebate. Like people are now after the tax rebate, people are now able to save more money. And the easy third one is and the easy financing cost. Like the RBI decreases the repo rate, so because of that, the bank interest rate also decline. And due to that, people are preferring more SUVs rather than any other models. And the major part is the investment. Like Mahindra has a huge investment expansion. Like it already announced that it will set up approx 150 billion unit in Nagpur to take to cope up with the demands in the ICE or the tractor segment. And the third one and the last one is they are also planning to launch in the EV segments. Like I have said earlier, they're also because the EV market in India is rising and the Tata has the major player in the EV market. So Mahindra is also planning to expand its EV segment by introducing many vehicles. Like there are many vehicles in the pipeline which are expected to be launched in 2026. So in my opinion, right time is the best for investment in Mahindra, which someone hold for next 2 to 3 years.
Okay, wonderful. How many are convinced with his pitch?
I had a question.
Yes.
Yes.
Yeah, Dishang, great presentation. So like at the bottom line, this sector, auto sector is very cyclical. Like
Yes.
as a consumer, if I buy a car, I won't buy a car again. So like abhi jo last 4 months mein jo bhi ho raha hai, we are tracking auto sector extensively. The sales are skyrocketing like everything. So like after 1, 2 quarters, I feel like sales will decrease. One, and models will stop work. They will stop making new models because of ICE. So not ICE because of CAFE norms. So do you still think that it's a good stock, or like is there any other factor you are considering?
Like you said, the cafe norms, I didn't know much about that. Uh, I will get back to you.
No,
The
Dishant, because those norms are affecting Mahindra the highest because like SUV में ही वो लोग ने norms बनाया और Mahindra के 75% of sales SUV के जो है they are diesel and
नहीं नहीं
diesel emits the highest CO2.
you are absolutely right. But क्या कुछ टाइम से मैं वो ऑटो ये पर्टिकुलर न्यूज़ में ट्रैक नहीं कर पा रहा
Yeah,
था. So I will
sure,
get back
bro.
to you on this time, on
Sure,
this
bro. Because
topic.
I'm also tracking Mahindra right now. So that's why I
Okay.
raised this question because you spoke Mahindra, right? So I was hoping to
Yes,
get a
sir.
perspective.
Yeah. And the other what you have said that expect
Other thing,
cafe norms.
yeah.
Yeah.
And the other thing is that the industry is very cyclical. और like अगर 4 or in let's say 2 quarters में अगर good sale हो रहा है तो after that will the sale still happen? Like जो लोगों ने गाड़ी गाड़ी खरीदना था वो लोग ने already खरीद लिया. Like it's a thing which you can delay. Like I'm a customer, I want to buy a car. I really want to buy a car. Now I see that prices have decreased, then I'll buy it. And this has
Yes, sir.
already happened for the last 4 months. So like, will this even continue now?
And
Yeah.
90% of the purchase which happen in India, buying a car happen by taking a loan. So that is also really going to affect.
Yeah, Dishang spoke about that. He spoke about repo rate and that, the decrease in repo rate and
So
great interest
your
rates.
question अगर बेसिकली अगर हम देखें तो जो मेजोरिटी ऑफ द ऑटो कार जो सेल्स होते हैं वो जनरली फेस्टिवल सीजन्स पे बढ़ जाते हैं. आई एम नॉट श्योर अबाउट द फर्स्ट क्वार्टर लाइक बट आफ्टर द अगस्त और सितंबर द ऑटो सेल्स इंक्रीजेस बिकॉज ऑफ फेस्टिवल सीजन्स. So in my opinion the sales will be still good.
Because
Can
I'm hoping for this month's auto report. Like I want to see the performance in February because it has already gone for 4 months. The sector is an uptrend. So I'm hoping a downtrend for like next 2 to 3 months, maybe.
Yeah, for February hardly impact any percentage on auto sales. Like if we see the data for last 2 to 3 years, there is not much more sales in February.
Yeah, usually Jan में होता है because New Year और फिर
New
December में
Year's
wedding
and
है.
other sales,
Yeah,
but in
yeah.
Feb March then उतना वो कुछ होता नहीं है auto sales में ज़्यादा.
Good, good. Thank you for your perspective, Dishank.
Okay, thank you.
Audible, ma'am? Hello?
Yes, Hemant, you are.
Yes, ma'am, I want to ask Dishank one question. Is it fine?
You'll have to fix your mic or you'll have to buy a new cord.
I will fix it, ma'am.
Or you buy a iPad, a MacBook.
I said, yeah. Yes, ma'am.
All right, I'm sorry, we'll have to cut here. है ना? So we'll meet tomorrow and Hemant will start the class. Okay, Hemant? All right? By pitching me a
Yes,
stop.
yes.
Okay.
Yes.
All right. And I want to know why the strength is so scanty. Where have others gone? Who will find out for me? Stock analysis करते हो, ये वाला भी analysis करना है हमने. चलेगा. It was a great
Ma'am,
class.
I think there is going to be the month end. That's why some of them are working. So there is going to be some extra hours of work.
Okay.
That can be a point.
That's so positive of you.
And many these days are marriages also happening now, so some of them are pending that.
Okay. Okay. Got you. All right, people, thank you. And I'll see you tomorrow. Keep up the good work. Keep up
Thank
the
you,
good
ma'am.
work, everybody. Wonderful.
Thank you, ma'am. Thanks,
Thank
ma'am.
you,
Ma'am,
ma'am.
I would try to answer the question which you have asked me earlier.
Okay, okay.
Just
Tomorrow or today? Now.
now like just whatever I can think.
Yes.
Thanks for the question. That question regarding the WAC. So thanks for the question, ma'am. The WAC is the short form for the weighted average cost of capital. It tells that the cost at which that particular company is raising money through the market, either through equity or either through debt. So if a particular company's cost of raising that money is higher, that means it affects its valuation, because it ultimately affects its potential of generating future cash flows. So that's why it affects its present value, for which like to which we say valuation. Like that present value means the valuation. So that's why and when that cost of raising the money is low, that means that the market is giving the higher valuation to that company, to that company. So that's why so sorry. So when that when that cost of raising money from the market is high, that will ultimately affect that company's valuation.
Okay. Are we satisfied with this answer? Please raise your thumbs. Yes. Because I want to terminate the class. If you are not satisfied, he'll reattempt. Chalo. Sorry for my bad jokes, but yes, it was a fantastic class. Great effort seen, and I'll see you all tomorrow.
Okay.
Thank you, ma'am.
Thank you, ma'am.
Good night. Good night. Good night.
Ma'am.
Good night.